All right, welcome back to week 9. A little late, a little behind, but we're gonna kind of go a little quick today. Don't have a lot to share, but I did have kind of a quite the snafu last week that I definitely want to comment on. So we'll get right into it. Obviously, a bit less of a week, less earnings and that going on last week, and so we had a rolling order. I noticed that my Qs. My long-term, what's called a poor man's covered call. So typically a covered call is you buy stock, you sell a call against it. I bought 2 deep in the money options instead of buying 100 shares of stock, and then sold calls against it. And I was selling calls because I already made pretty good money, but I wanted to make a little bit more while I waited. Excuse me, while I waited for 12 months to pass so I can get long-term capital gains on those long calls that I have pretty good gains or profit on, so I want the better tax rate. So while I was doing that, I was rolling these out, so that's where this came from. I think April 9th is technically far enough to get the 12-month long-term capital gains, but we may roll that out a little bit further just to get a little bit more, and 100% make sure that I've got long-term capital gains. We definitely don't want to mess that up. And I'm excited because we're getting close to getting all that capital back. So there's about 15 grand. So about half the account is sitting in that one position. And I really don't like it. I like to have more access to capital and freedom and cash in the account. So that'll be nice here shortly. TLT, I finally just closed it. I had 50 shares on TLT as kind of a hedge to offset the big QQQ position. And it really just hasn't done, piss all for a while. I've had that one for probably 6-9 months, almost as long as I had the Qs, and so finally just got out of it. I do think yields will continue to go up on the bonds in the 10-year, which is not good for bonds and for bond prices. And so I think ultimately, even if the market does crash tomorrow, I think it's better to be in cash and working with the delta neutral strategy on the stocks than having bond exposure. So that's where that is. We rolled out our take 2 position because of course the market was cratering. Some of our puts that were getting tested, we rolled those out for a little more time, and a little credit here. Sarepta, we had an earnings play. We had earnings on C Limited, Zoom, Lemonade, Target, and Novax last week, and about half and half. C, Zoom, and Novax were too big of an expected move, so we had to go to the iron condor route. That's why the credit is so much smaller than like Target and Lemonade, for example. Closed out, let's see here, Target for a nice win, C Limited for a nice win, and Sarepta Therapeutics for a nice win. And then the next day we had earnings on Amba and Dollar Tree. Made a little profit on both of those, so that was a good day. And then our call spreads started closing because, again, the market was falling. So all of our call spreads, which are, again, I'm selling call spreads, so I want that particular stock to either stay or fall in its price structure. And so it did. So I had Penn and Carvana. These are actually very quick ones. I realized I set these up pretty much 2 days ago, or this is me setting them up, excuse me. And then you'll see shortly down below that they close very quickly because I was too long deltas. I had some other stuff close out, and so I was pretty bullish despite the market falling, which I don't like to be. So I threw on some more short deltas to be a hit more bearish. So we were still very bullish, but I put these on to help offset that on the 3rd, which I believe was Wednesday. Our PayPal call spread closed. That was a nice little profit. We're rolling our Discover Financial, and then we actually closed it the next day because we realized after we rolled it, of course, that I keep track of the break-even points, and we were actually in the money, profitable in this particular spread, and it was the 3rd time that we'd managed or rolled it, so I just decided to close it for a small win, take the win, run, reset everything later. Rolled our Best Buy. Amazon, we finally closed our call side, so we actually broke apart our iron condor on Amazon because it just fell too far. I couldn't roll the puts. The calls were so cheap, we just bought them back. So now we just hope Amazon is above, I believe it's about 31.80 by March 26th, or it comes up enough so that we can roll it, and it's pretty close to doing that anyway, so we'll see. A rolling, so management of the trades rolled this out a little bit for 0, but that's good. We got an extra 3 weeks for free, so that was great. Same with NetEase, got a nice credit on that, and Broadcom as well. Actually, Broadcom, this was an earnings trade, excuse me. So we had an earnings trade here, and then closed the earnings trade, and then we closed Zoom and Novavax. Those were going against us. So unfortunately, I believe it was Zoom and Novavax we could have gotten out for much less in the form of max loss had I just closed earlier. So I didn't stick to the plan, which is typically close as soon as we can in the morning. We're just trying to get out of or get all the volatility that is left because earnings are now over. And unfortunately, I thought I knew better based on technical analysis and what the news said. Zoom, for example, beat its earnings and its sales targets, so all good news, but it fell off the planet. So didn't go well at all for that. And then we also had our Penn Gaming, like I said earlier, closed out just 2 days later. So that was a good trade. And then we'll flip over to our P&L real quick. So that's the yearly, right? Including this week, like I said, I'm about a week behind. And all in, down about $5,000. So ouch, for sure. We've taken out about $2,200, which is part of this. So it's about half that, which is good. I think we're holding steady, which is good in our returns, and ultimately still pulling out that money. So not terrible. Obviously, we want the money to start tracking upwards. And then for this week, for week 9, we were down about $1,800. And as you'll see, if we come down here, most of that was closing out that long-term TLT position, right? So if we close this out, we're actually slightly profitable for the week. But that happens, right? We're maintaining the entire portfolio. Still at a 75% win rate. I love that. And then our earnings, I believe, are doing well. And I really need to 75%, right? So that's good. And I really feel that I need to get the account bigger. So I might be making a deposit because I need more capital so I can raise the amount risked per earnings trade back up to 1,000. So that I can start doing iron flies on all these earnings trades. So far, it's proving that while the iron condors are great to be in the trade still, the little wins I'm making when I do win aren't outweighing the bigger loss when I lose on those. Unlike the success I've had with iron flies, I get a lot more credit, so it just helps a lot to offset that and really does well. And you can see that here, right? So iron flies, I won 100% last week. Made that, I won half of the iron condors. But because iron condors, you win a little, but you can lose a lot. But you have like an 80% plus success chance. Obviously, it just doesn't go well sometimes. And so if we go back the rest of the year, just get a little more data. Right, 71% chance win rate, excuse me, but it's only $240 of total win, which is not ideal. 63% chance, but iron flies, obviously we had a rough spot in the beginning of the year. So that should all even out. Ultimately, iron flies should be the better trade, hands down, if I can afford to do it with the risk management aspect. That's why we might need to increase the account. So yeah, and then finally we're going to finish up with pitfalls. So I try to set this up as a set and forget type thing. I don't like to stare at screens all day. You can. I think you would not have as many of these little hiccups and things falling through the cracks as happened to me from time to time. But I don't like that. I don't want to be stuck here. I like to be doing other things, what have you. So the biggest thing that I do is I set an alarm to go off, especially for earnings trades, about 15-20 minutes before the market closes, to remind myself, regardless of what I'm doing, if I'm at the golf course, if I'm at the coffee shop, if I'm hanging out with friends, if I was getting a haircut like I was on Thursday, it should go off and remind me, hey, and even if I'm sitting in a barber shop, I can pull out my phone and I can take a look and get it done. I've done it in less than 5 minutes on 10 plus companies doing earnings because I forgot at the gym one day. So it is possible, and I like to have that so that I do have the freedom to go until I forget. So, and obviously with stuff like this, like, you need to stick to the plan, because I could, those 3 trades that I missed on Thursday could have all been winners, and that could have been $1,000 day. I'm incredibly lucky to say that all 3 of those trades would have been either losses or break even, so it would have saved about $500 or $600 by not doing that. But that's not the point, right? I'm trying to stick to the plan. I'm trying to be robotic. I'm trying to do every earnings trade that qualifies for my criteria, because you never know when you're going to miss. Right? Last year, I had 2 or 3 positions. I think bookings was one of them. There was a big one, big win in Tesla. Both of those were like $2 to $3 grand, right, a piece. So if I missed those, ouch. And on the flip side, of course, if I hadn't done Amazon at all last year, I would have saved about $8 grand. So, but the trick is just being consistent, because then you can feel more confident in what you're doing, and you can explain it, right? It's not like I love the fact that for the most part I could hand my trading plan to someone else and they could implement it. Now, I think there's definitely still some nuances and some gut feelings in that I have that they'll have to learn, but ultimately I could do that. Whereas I think a lot of traders, or people that call themselves traders, are a lot more from the gut all the time, right? They're staring at the chart, they're like, great, now's the time. But I think one of the tricks is to become a truly great trader, and ultimately a long-term trader, is to systematize everything. Make sure you're doing every at-bat that you can, and just sticking, being consistent. It will really help you in your trading moving forward. And of course, journaling it all, writing it all down, right? I love that I can see all these statistics. And I keep saying I'm going to dive into these more, and there's an API with Wingman, so I could create a crazy spreadsheet, which I'd love to do at some point, because I'd love to see all the little metrics, like, hey, don't trade Monday mornings, don't trade on Tuesdays. Right now I'm doing a lot of that manually, but yeah, so the lesson for this week is be consistent, stick to the plan no matter what, have fallbacks, have a backup battery, have backup Wi-Fi, whatever it is, to be able to continue trading your trading plan the way it's supposed to be every time, so that you don't miss out on potential winners. So thanks again, guys. Have a great week.